diving right back into the numbers this week. We are going to be looking at the consumer confidence of Germany, as well as the inflation rate numbers that came out. And then we'll kick off by talking about the euro area and what's been happening in terms of unemployment. And hopefully there's some interesting news involving the BRICS that we can get into a little bit in the video. So the euro area, we saw unemployment hit 6.4%, I believe. I think if you look at the whole European Union, it's about 6%. Yes. But in the euro area, this is quite low unemployment for historical standards. So it's edging in the right direction for the euro area as economies come out of challenging times and start heading in a positive direction. Do you see anything there that you find fascinating?
I think it gives a good overview about the overall European area, but it's also, one should also look deeper into the numbers and what the actual countries or constituents of the European area are doing and how they are doing. For example, Spain has still a rather high unemployment number. And I mean, for the people in Spain who don't have a job, it's, I mean, it doesn't say too much that overall the unemployment number is 6.4. So there is still quite a bit of work that has to be done, but it is going into the right direction. And I think that especially within such a construct that countries can work with each other and learn from each other how to handle it, how to bring unemployment down. And that's also what we see, what Spain is trying to do. We think that it will continue to go down over the next quarters of the next years.
I think people might get confused between Euro area, European Union. The Euro area, why we see it as important is it's where the euro itself, the currency is circulated, it's used. And so you have to we look at those, I guess, parameters to get an understanding of where the euro is going to head in the future. Mm-hmm. So just as kind of a sidebar. Going into a European country, Germany, we have two interesting pieces of information with inflation coming out in Germany, where we saw an uptick from 2.2% to 2.4%. So a little bit of an uptick, which is concerning, but they're still relatively close to their target inflation range, which is good. We'll see. I mean, we're going to be talking about the ECB decision next week. But yeah, so it's, kind of hovering in good-ish territory. What do you see there?
Yeah, I mean, it's unfortunate that it is increasing again, but it's not something which came totally unexpected. We have seen similar behavior in the US as well, and we are just now having this second price increasing round effects that are coming in, especially in the services market or area where services just become more expensive. And it makes sense because especially with Germany, they have a very strong employee laws. And so there has been a lot of salary increases in the last year. In the last 12 months, there are still salary increases, and also the expectations that salary will increase is among the people, the employees, but it will not be as strong anymore as it used to be.
Yeah, certainly. And I think when we transition into kind of the German consumer consent, we do also see that there's kind of an uptick. It's still quite negative in terms of what the consumers are feeling about the economy, but we really start to see it coming back towards more positive levels. And I think that's part of that is, people are able to switch jobs, as you mentioned, get higher earnings potentially. But there's always side effects to those things. As you mentioned, services prices go up, companies have to cope with higher payment to attract, or higher salaries to attract that talent. And so there's kind of this hand-in-hand thing. However, if people are able to do that sustainably and the companies can sustain it for the long period, it can lead to nice periods of economic growth and even positive consumer sentiment.
Yes, definitely. And I mean, in the last couple of years, since 2020, there was so much insecurity in the markets or in the people's life that they are quite hesitant to really go for it and increase the consumer sentiment, because you never know what's coming tomorrow.
Yeah, especially in the energy sector and the challenges that they've seen there. Not going into who caused what, but we just saw prices increase crazy, and that hits the consumers hard. And
Yes.
if that's hitting you hard, your sentiment's going to be quite down.
Yeah.
Let's transition into this interesting news that we see from the BRICS nations. Quite fascinating, actually. India and China recently just confirmed with the Maldives that they will start trading in local currency. Before they were using the US dollar. So this kind of comes back to this hot topic of de-dollarization, something, the whole reason that we believe that the long term of the US dollar is trending down. And now we're starting to see countries test the waters out a bit of all these trade agreements that we have in US dollar, let's get rid of it. And I think it was a huge number that they're going to start trading in. I mean, a huge number for us, it'll be in the billions, $1.4, $1.5 billion. So a small thing between India and China and the Maldives, but kind of shows a trend.
Yeah, it's especially between the Maldives and China and Maldives and India.
Correct.
So the Maldives is not like a huge economy. They don't have like a huge GDP, but it is considerable. And it is interesting to see how within certain periods or certain partners from the BRICS nations, they are actually start to try to negotiate some deals where they start to trade in local currencies. We have already seen that in the past with India and Brazil it was. So it's really like the desire is there to get away from the US dollar, not because, I would say, not mainly because the US dollar is such a worse or bad currency, but the US government has so much power just by the fact that others use their currency. As soon as the US dollar is involved in any kind of the business, the US government says or has the perspective that they have a say in this.
Yeah, they have a huge leverage factor.
Yes.
And that is something that we've also seen China in the past 2 quarters reduce their agency bonds and treasury holdings by over $74 billion. So again, there's trillions of US dollars in circulation.
Yeah.
However, this shift we're starting to see come step by step by step. There's no economic benefit for everyone to leave the US dollar immediately because the whole world economy could collapse.
Yeah.
But this slow drop, this slow exit until these countries, even, I guess, not necessarily equal weighted powers, but heavily weighted economic powers can slowly reduce their dependency on the US dollar over time for more of their own financial independence or monetary independence. And so, it's something that everyone freaks out of. All of a sudden, there'll be this new currency and it will dominate. I don't really personally see that, but I do see the slow withdrawal, and we keep seeing these signs of it that people need to be aware of. This is a long game.
Yeah, and I think it's also interesting to see, at least as far as I understand it, that these negotiations and these deals are like every country uses their domestic currency, and it's not like instead of using the US dollar, we are going to use the Chinese currency, and then everyone uses the Chinese currency and gives the Chinese government the power the US used to have. I mean, to a certain extent, that's certainly something that will happen, that China will become more power by having just a very high trading amounts between the economies, but it becomes more to a level where more or governments get back more of this sovereignty.
Sovereignty. Yeah, absolutely. Yeah, it's a tough word for me, so yeah. It's all good. All right. So next week we're going to be looking at the interest rate decisions of Canada and the European Central Bank, and we will also be looking at the non-farm payroll in the U.S. There's going to be some unemployment figures, so we'll be looking at those.
Perfect.